It's Friday Coffee, the Mortgage Man Eric, and here we go. And today, another weekly update. As a result of the coronavirus and COVID-19 stuff that's going on out there in the world, the mortgage industry is not immune to any of those things and has been hit quite hard with what is going on. Been given weekly updates in the midst of this melee that we have going on instead of the bi-weekly. And here we go. So just to kind of recap where we left off last week, we were wanting Mark Calabria. There's a name. That's a name you guys should be getting familiar with. If you haven't heard it already, Google it. This guy has created a number of problems for the mortgage industry, and if that creates a problem for the mortgage industry, it's a trickle-down effect that creates a problem for the consumer, people that want to refinance, and buyers. So stay tuned. And so kind of recapping where we left off, we were really wanting Mark Calabria, the FHFA, who is Fannie Mae and Freddie Mac, all these terms, right, that you got to kind of become familiarized with in today's world, mortgage world, so you're in tune, so you know what's going on. So, Mark Calabria, FHFA, we wanted the FHFA, Fannie and Freddie, to step up to the plate like Ginnie Mae had done, who's FHA, USDA, and VA. In regards to the CARES Act, which is the stimulus bill, right, that they put out there that consumers can miss, payments in forbearance. Miss, quote unquote, right? It's not really. So just recap on that. Forbearance is not deferment. Deferment is where you can miss some payments and they just kick it to the back end of the loan. Boo! That's deferment. Now, some people may be getting a deferment when calling in for the forbearance. But if you just get a forbearance is you're just kicking the can down the road a little bit, a couple months, you can go 6 months and then file an extension for another 6 months according to the CARES Act. That's the verbiage in the CARES Act. So you could do 4, you could do 6, up to 6, and then at the end of 6, you can kick it down the road for another 6. What does that mean? What does it do? So you miss a payment for April, you miss a payment for May, right? Whenever you decide to start making payments again, all of those payments together, one lump sum, are now due. So if you did 12 months, right? 12 months of forbearance, and let's just keep the numbers even. Let's say your mortgage payment was $1,000, which it probably isn't. It's probably a lot more than that. So at the end of the year, you'd be responsible for a $12,000 balance. Right? Now so just to understand that, kind of recapping, that's forbearance. That was part of the CARES Act, the stimulus plan as a result of COVID-19 coronavirus. So some consumers are getting lucky and they're getting a deferment package. Way different. Most people are not. Most people aren't even inquiring what forbearance is doing, what it really means, and what it's going to say on your credit report. And it's not going to give you the opportunity to refinance because it's going to say this loan is currently in forbearance, which removes your eligibility from refinancing at history's lowest interest rates that we have right now. Okay. So, part of the CARES Act, Ginnie Mae has stepped up to the plate and said, look, hey, we will reimburse you servicers for consumers that are in forbearance. Okay, so, and again, another recap. Just because the consumer doesn't make the mortgage payment to the servicer is still on the hook, baby. The servicer still has to make that monthly payment to the bondholder. That bondholder is still getting his monies every month, right? If you bought a municipality bond, let's say, or a CD, right? No matter what happens in the market, you're still getting your return on your investment. That's just how bonds work. You're going to get your return. If you didn't get the return, the whole market would collapse. So you're going to get your return. So think about that. So Ginnie Mae finally stepped up to the plate and said, yes, hey, we're going to reimburse the servicers for the monies out of the stimulus package, for the monies that needs to be made to the bondholders. So FHA, USDA, and VA is pretty much intact. We should start to see, hopefully, some pricing improvements come back for those types of loans, because anything underneath a 680 credit score has got a pretty jacked up interest rate to it right now. And that's just across the industry as a whole, just is what it is. Moving on though, not to get sidetracked. So we were hoping that Fannie and Freddie, because Fannie and Freddie were like, no. Mark Calabria, the director of FHFA, which is Fannie and Freddie, was just saying, no, we're not helping. We don't believe there's going to be that many people going into forbearance, right? At the beginning of the week, there's already 2 million homeowners that went into forbearance. I want you to think about that there alone. What this coronavirus, COVID-19 thing and the shutdown is going to do to people, right? How many people do you think that can miss a year's worth of mortgage payments and, boom, hey, here's the whole enchilada. How many people do you think are going to be able to do that? Slim to none. So how many people are going to end up losing their homes? Think about that. Anyhow, nonetheless, back to Mark Calabria, FHFA. So we were wanting them to step up to the plate because Fannie Freddie has over twice the amount of reserves as Ginnie to help with these payments that are getting missed, that the loan servicers are on the hook for. Well, Fannie and Freddie weren't willing to play ball. So at the beginning of the week, Fannie and Freddie said, hey, we're going to let you cover the first 4 payments, and then we would, forbearance, and then we'll pick up the rest. We'll pick up the rest of the tab. And, the news went wild on that. Fannie and Freddie unsuspectedly is going to help out, blah, 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 right? And then nobody, of course, nobody read the fine print when the news releases came out. Hard to believe that, because the news is just always truthful, right, and on point. Well, it's no difference in the mortgage industry. They don't necessarily deliver the right news, the truthful news, the factual news, or anything in the hidden print. So it was terrible news that came out with that release. So Mark Calabria is now penalizing the banks for, check this out. My goodness gracious. So if your loan goes into forbearance, the penalty, now this is on conventional loans, Fannie and Freddie, the penalty to the originating lender that wrote it is 500 basis points, which is 5% for a first-time home buyer, 7% for anybody else. I want you to think about that. We do a loan for you, and you go into forbearance afterwards because of this crazy melee that we're in, right? You get furloughed, you lose your job, whatever, and hey, I'm going to take that forbearance program, man. Can I get me some of that forbearance? And then all of a sudden, a bill's coming back to the bank that wrote that. 5% first-time home buyers, 7% for anybody else. Before Fannie and Freddie would securitize the loan, pick up the loan. Because that's what has to happen. That's what happens in a normal transaction. We write the loan, they get picked up by Fannie and Freddie. They get securitized by Fannie and Freddie so that we can get our warehouse lines replenished and keep lending to other borrowers and home buyers, right? That's just how it works. So Fannie and Freddie saying, look, we're not going to securitize that loan until we penalize you 5% on first-time home buyers, 7% on other loans. I want you to think about that. On a loan of $200,000, the penalty would be $14,000 just to get it off the books. Now you tell me which banking outfit can sustain that business practice. It's absolutely absurd. And look, anybody and everybody in my part of the industry is thinking that this is purposeful, this is sabotage from Mark Calabria, the director of the FHFA. This is being done purposely, and what a time for this to be done. So, yes, this hurts banks, but guess who else it hurts? The consumers. You guys. The people who want to refinance. The people who want to buy a home right now. This whole thing's supposed to help consumers. Allow them to feel some relief from losing their jobs and being furloughed and being cut hours to be able to go into forbearance. And now if you do, there's a penalty. And as a result of that, the mortgage industry is in crisis and could very well collapse if this doesn't get taken care of. So, of course, there's a huge movement going on right now with the NAMB, National Association of Mortgage Bankers and Brokers. a number of other organizations in my community as well that are getting petitions, we're having letters written to our congressmen and senators in our own states so we can press the White House, so we can press Mark Calabria. They're calling for Mark Calabria's job. I mean, because he's just, look, he's creating more volatility in an already volatile market, right? I mean, for the love of mankind, this is not the time to pick a fight for whatever fight he's wanting to pick right now. Like, holy, this dude. And like, look, I'm emotional about it. It's a sensitive topic because I'm deep in the weeds of it, but I know what it does to my industry. I know what it's doing to consumers. It's not helping consumers. Look, this CARES Act, this isn't helping consumers by any means. And you guys might be, well, screw the big banks. And again, has nothing to do with big banks. This has to do with the servicing part of it and getting it securitized by Fannie and Freddie so that you can continue to keep lending and keep giving out loans. If banks, servicers, investors, aggregators, they can't give out loans, how are you going to get loans? How are you going to refi, right? If you needed to refinance because your spouse's credit or your spouse's income got cut or whatever, right, that would save you $300, $400, $500 a month right now, dude, borrowers, consumers are jumping through windows to get that monthly savings, and rightfully so. And this right here, this move by Mark Calabria is impeding that. To be nice, is impeding that. He's sabotaging this. He's train wrecking this right now. Keep that in mind. But that's where we're at. Look, that's the reality of where we're at. And like I said, there's plenty of movements that are going on right now to try to get our senators and our congressmen to give a full court press and to get this changed, because it can't last long with these penalties that are put out there right now. It can't last long. If it does, you're going to see investors and lenders and banks pulling back with who they will lend to. And you're going to see the credit requirements or the credit threshold, the box that you need to fit in is going to keep shrinking and shrinking, right? You're going to need 740 credit scores and above with 20% down, and welcome to 1950 and lending again. It just is what it is. If we don't change the trajectory on where we're going right now with this. With that said, it's Friday Coffee with your mortgage man, Eric. See you. 602-757-2171. See you.